Do you catch yourself always being on the wrong side of the market? Your stop loss needs to be your take profit and your take profit needs to be your stop loss? Then this video might be for you. And this video will show you where to buy, where to sell, how to read market structure and how to identify point of interest areas in the market. I think this video will be very beneficial for everyone out there, even though this can be a very basic thing, but if you're doing it wrong, you will not be profitable in trading. Let's get into the video. Okay guys, so before we get into this, I want you to know that in my opinion, market structure is king. Literally nothing is more important than market structure because market structure will give you the direction of the market. It is really easy to identify which way the market is moving just by using market structure. So there's no need to overcomplicate things if you're only using market structure. So let's get into the charts right now and I will explain you a thing or two about market structure. So what is market structure? Market structure is basically the way the market is forming and you are following that way based on its structure. So it is highs and lows, it is higher lows, lower highs. And based off this, you will know which way the market is trending. So let's get into it real quick. This is your high and this is your low. If the market forms a higher high and a higher low, you are in an uptrend. Okay. If the market makes a low, a lower high, a lower low, lower high, lower low, you are in a downtrend. So uptrend, downtrend, okay? I think everyone is familiar with this. This is basically lesson number one in trading, the most easy thing, how to identify a trend, an uptrend, a downtrend. So what happens when we come from this downtrend and we break this previous high right here? And we start doing this. At this moment, we are creating a market structure shift because we're going from lower highs and lower lows to higher highs and higher lows. So our market structure has shifted. So basically that is what happens. Right here is our market structure shift. You're looking for a place where you can journal your trades, write on your thoughts, and also take a look at your playbook. And you also want to keep yourself accountable to your morning routine, your evening routine, and you want to give yourself a grade based on that. But what if I told you there was even more? It is a place to do your weekly market outlooks, to have your strategy checklist, to have your trading plan, to write down your daily watch list, to write down your daily missed trades, and a place to keep your backtested trades organized. You also have hotkeys to all the trading websites that you need. You can also do a daily check-in with yourself to follow up your actions. This is the Trading Central 2.0. Then you also have break of structure. A break of structure is basically when you break the previous structure. So in this case, it is our previous low, it has been broken right here. So right here we have a break of structure. Whenever a break of structure encounters, you can expect a pullback. It is not going to happen immediately, it's not going to happen way down there, but you can expect it. Somewhere in this range, you can expect a pullback of some kind. So this is basically the easy stuff, and I'm going to explain it as easy as I can because I think it is just too complicated out there. And it is not that complicated, right? It is really, really easy. So this is just uptrend, downtrend, market structure shift, and break of structure down there that got deleted for some reason. So I think this is really easy up to now, right? So then, we have basically three types of structure. You have your swing structure, your internal structure, and your fractal structure. So swing structure is basically the bigger picture, right? The big trends. So your swing high, swing low, swing high. Then you have your internal structure. This is your internal structure. Why are these not swing highs or swing lows? In a downtrend, the swing high is the highest point that caused the swing low to form. And the swing low is the lowest point that caused the creation of a significant pullback. Once this pullback has formed and this previous swing low has been broken, this becomes the new swing high because this is now the highest point in the market that broke the previous swing low right here. This then becomes your new swing low because this is the point that creates the significant pullback, right? So then we have internal structure. So internal structure is basically everything that happens between your swing high and your swing low. Until your swing low gets broken, this swing low stays intact, and this is all internal structure. This of course also goes the other way around. Until your swing high gets broken, this is all internal structure, and these two stay intact. So then we have our last point, and that is fractal structure. Fractal structure is basically the small little pullbacks that price makes before a move happens. So basically whenever you see something like this right here is fractal structure. And the importance of everything, we are going to go over that in a minute, but for now this is everything that you need to know. Of course this also goes for an uptrend. It will look something like this, right? This is your swing low, and in this case guys, The swing low is the lowest point that formed the new high, and the swing high is the highest point that formed a significant pullback. In this case, the swing high gets broken, but we cannot identify the new swing high until there is a significant pullback. But we can change our swing low up till here, because this is now the lowest point in the market that created a new high. So then we start to create a pullback, and I would say when it is around 30%, 25%, you can identify that as a significant pullback. You shift your swing high up till here, and this becomes your new swing high. Basically, in an uptrend, you want to see these swing lows keep on standing, and these swing highs get broken over and over and over again. Whenever a swing high or a swing low hold stands, this one becomes a strong one, because price couldn't break through it, and basically this created a reaction to create the opposite high or low. So, for example, right here, this right here is a strong swing low, because it created a new high and it did not break. Then we come right here, the swing high gets broken. So this now becomes our strong swing low, because it does not get broken and it breaks the previous swing high. These swing highs, they are weak because they get broken, right? It's very, very easy. In the same scenario right here, swing high is strong because it breaks the previous low. This low is weak because it gets broken, right? So basically our goal, if we know what we know now in this market, is to sell as closely as possible to strong swing highs and to buy as closely as possible to strong swing lows. So for example, you want to be looking to sell right here. You want to be looking to sell right here. You want to be looking to sell right here, right? As high as possible to that previous swing high. Let's take a look at this on the charts real quick. So for example here, this is your swing low. It is the deepest point that created a new high. This was a previous swing high right here. Now we need to wait for significant pullback to identify the new swing low right here. Then this one is not a new swing high because it does not break this high. So we still keep these 2 points intact, right? I'm just going to move them. I think that is a bit more easy. So then this one gets broken right here, but we cannot shift our swing low because this is still the deepest point that created this up move, as this one did not break the swing high. Then we have a pullback created right here. We can shift the swing high to here right now. And now we can move the swing low up. Now the swing high gets broken again. We cannot move the swing high until there is a pullback, but we can move the swing low up to here. Then we can also move the swing high. Bam. This is not a break of the swing high because it is not a full body candle close above it. So basically for a full body close above it, you want to see the candle doing this, right? And it did not do that. This one is in fact. So now we can move our swing low up to here. And this becomes a new swing high. As you can see right now, the swing low gets broken. So what does this tell us? This becomes a market structure shift, as structure is now going from higher highs and higher lows to lower highs and lower lows. Right now, we can identify our swing low right here because this is the first point that price created a kind of a significant pullback right here according to the previous price action. Our swing high becomes this high right here. And by the way, I'm doing all of this on the 4 hour. You can also zoom out on this and then, of course, these will become your big swing points. And this is your swing high, your swing low, your swing high right here. But that is when you look at it on a daily chart. I like to look at it on a 4 hour chart. I'm a day trader after all, and I trade these internal pullbacks and everything. So it is important for me to know where price is at the moment. But of course, I will always pay attention to the higher time frames as they are still very, very important. So swing low gets broken again. We have a continuation. We cannot identify the new swing low before there is a significant pullback. It happens right here. Significant pullback. This becomes now the highest point that caused that swing low to break. Then again, swing low gets broken. We can identify this as the new swing low because we had a pullback right here. As you can see, it is getting really tiny, and this is also already getting into fractal structure almost. But this is, like I said, because I'm identifying it on the 4 hour, I'm a bit quicker with moving my swing highs and lows. So then this becomes the new swing high because this is the high of the pullback that created this break of structure. We cannot identify the new swing low before there is a significant pullback. Swing low happens right here. And remember guys, we are in a downtrend, so our swing highs are strong, our swing lows are weak. We want to see our swing lows getting broken, and we basically want to sell as closely as possible to the swing high. And right now, this is why we go into point of interest areas in the market. As you can see, this is what I traded live, and this is already something that I marked out. So basically, point of interest areas in the market can be all the blocks, fair value gaps, or previous highs and lows that get taken out by a liquidity grab. But let's just say, to make it easy, order blocks and fair value gaps, imbalances in the market. So if you don't know what an order block is, an order block is basically the two opposite candles, or the one opposite candle color before a collapse happens, like this. So this is an order block, this is an order block, this is an order block. And I like to take the last because this is basically identifies the whole move that caused that downwards move, right? But for an example like here, there is no point to take the last two candles, and I just take the most high one in this case. It has to do with the fractal structure that I was talking you about, that small little up move. Then it is two candles, otherwise it is just one candle. So for an example right here, we came to this 4-hour order block, we had a lot of resistance, and then we came down from there. So this is basically how you could approach this trade. You put your entry on this 4-hour order block, you put your stops above the swing high, because remember, price can do everything at once in between here. As long as it doesn't break the swing high, we are in the clear. So stops above the swing high, and you target the swing low, and this is basically your trade. 2.3 hour trade. And this is if you only stick to the 4-hour time frame, right? So let's take now a bullish example right here. This is what we also marked out. So as you remember, this was a swing low or swing high. And let's just mark out all the imbalances and all the order blocks in this chart. So this is a 4-hour imbalance. Then we have 4-hour order block right here. And we basically have this 4-hour imbalance zone right here. There you have a fair value gap, you have fair value gaps right there. So I just mark it as this whole zone. Now, what I basically always do is, to make it a bit easier, I only take trades that are below the 61.8 extension from the Fibonacci tool. Some people take it below 50% because this is your discount area. I like to take it up a notch and take it from the 61.8 because this will give you the optimal trade entry. Then if we combine this with this order block, this is where you're looking for your trades to form. And let's say you do this again on the 4-hourly. You enter and on the top of the order block, stops underneath the order block. You target the weak swing high, and you have a 4.6 hour trade. Right, and this is basically just only using the 4-hour. And this video is getting quite long already, so I think I'm going to leave it at that. I will give you a quick tip. If you're using this, drop down to the 15 minutes and start looking for that change of character that I talked about. So basically right here, remember, you want price to come into the zone and you want to see a reaction coming out of there. You want to see this with the displacement. The displacement is basically a strong move that gets out of that zone, right? So that happens here. You have a strong move that gets out of the zone. This was not in my entry time zone because it was in the, I think it is the New York afternoon. Then again, a lot of consolidation right here. And then we get a change of character right. So basically a change of character is when your fractal structure gets broken. And again, you go from higher highs and higher lows to lower highs and lower lows. You're going to do the same. You're going to look for order blocks or for value gaps to base your entry on. So this will be my entry. There's an order block. Stops above the high, and you can target the most recent low, or you can take it up a notch and you go to the, let's say, the 1-hour, and you can target that weak swing low right here. As you can see in this scenario, we would have got stopped out by this wick right here. If you would have targeted the previous low right here, you would have won the trade. But if you get stopped out like this, and let's say it gives you a nice opportunity again, don't be scared to take the trade again, because the trade still remains very, very valid, right? So right here you have an imbalance again, stops above the high, and this becomes your new easy trade. And if you're even taking it up a notch, then you see trades like this happening, where you respected that zone, you're now shifting bearish because you're printing lower highs and lower lows. You see an imbalance forming in the markets right there. You take your entry right here after buy side liquidity has been taken, so there's also another confluence for you. Stops above the previous high, and you have a 1/5.9 trade. So guys, I hope you enjoyed. I hope you learned a thing or two from this. If you did, don't forget to leave a like down below. Don't forget to subscribe to the channel if you're new, and I will see you in the next one. Bye bye guys.